Hey everyone, Andy Moss here, trading-adventures.com with today's edition of the weekly charts, where we take a step back and look at the bigger picture of the markets and the price action and see what themes are developing and what we may want to be on the lookout for next week. If you're new here, as always, welcome to all the new subscribers. And I take a look at these charts every Saturday morning after the markets are closed for the week. The price action is on pause, and we can get a clear mind and a clear picture of what's going on in the marketplace. You can find them all right here under the weekly charts tab on the website. And with that, we'll get right back into the action here and see what's going on. Here's the SPX from steady decline to a resounding recovery and new closing weekly highs here this week. Notice the RSI makes a V. It's back up here firmly in the bullish area. Price action makes a V, back up to new highs. We had the DeMark buy set up down here at the low of this dip. And if we zoom in on these last three weekly candles, notice that each week picked up exactly where the last week stopped and just kept moving strongly higher. The only thing that stopped this recovery was the market's closing for the weekend. So now we've gone from extended to the downside all the way up to the upper Bollinger Bands, back above all the moving averages. Volume has been rising each of these last 3 weeks. And what do we want to look for next? We'll answer that later on in the show. But first, let's get through our charts. Qs, same action, of course, from extension lower to a new closing high with all of the corresponding factors. The RSI volume is a little light here the last couple of weeks, but not at a concerning level. DIA, the Dow Jones Index, is not quite to a new closing high on the week, but it's still had a very strong weekly 3-week recovery and back up into this area, which was pretty sticky before. You know, so we had several weeks in this 490 to 495 range, and we are firmly back to that level now. That could be some supply in the next week or so for the Dow 30, but we'll have to see how that develops. RSI at 59, and again, the volume a little light here, but not at a concerning rate. IWM, a very strong new high and right through this area, which was, you know, that's very meaningful there. That was a lot of weeks, much like the Dow. There was a lot of supply here as the dynamics changed between buyers and sellers. It led to this dip. It didn't dip quite as far as the other indices, but went back up very strongly. So that's what we see on the 4 major stock indexes. Here is Bitcoin. The anchor off of this failed breakout move is something we've been watching for several weeks now, and as of this moment, we are firmly above that. We are back to the middle of the declining Bollinger Bands. We are above this pivot low from back in last April's dip, and still not out of the woods, but it sure looks like a nice U or W-shaped recovery here that has potential to lead to further upside. So that's what we want to look for on Bitcoin. If we draw in an anchor from this recent high, the next level of reference, or area of interest, I should say, will be up here around just in front of 84,000. So that this line comes in right now at 83,815. We don't have to be concerned with the precision, but this is the area we want to keep an eye on if Bitcoin should continue to rise, which is in line with some price action from back here in late 2025. Meanwhile, the dollar has been relaxing and giving room for the other asset classes to rise. Volatility has been coming in sharply, which corresponds, of course, with the sharp rise in the stock indices. Moving overseas, we see the rest of the world is catching up as well. Just let's see here. This closing high was $74.45, and this week's was $74.47. So a new weekly closing high there on the All Cap World Index XUS by 2 pennies. So the strong recovery, 3 solid weeks of upward action is happening in the overseas markets as well. So participation, the more we look, the broader it gets. Even China is back above the anchor from this dip last April. Still in the lower half of the Bollinger Bands. The 10-week is still declining, and the 40-week is flat here. So I think this could be a meaningful area of some testing for Chinese stocks if they continue to rise. And, maybe this is relevant, maybe it's not, but it's interesting to me at least that the RSI continues to trend lower. So that's if we're going to see real recovery in the Chinese names, we need to get back above this 38 to 39, $40 area and see RSI break this downtrend as price carries through there. That's to me what would signal more meaningful recovery and resumption of trend there in the Chinese names. Looking at bonds. Bonds are just hanging around in here. They're not breaking down. They're not rising as strongly right here at the confluence of the 10 and 40-week moving averages, which is just fine. If bonds stay quiet, then that's part of what allows stocks to do what they have been doing. Treasury bonds, similar action, although below the moving averages. It's right back into this area, which has been, again, quite sticky for many, many weeks now. And high yield as a bit of a risk-on measure there. Very strong recovery in high yield bonds back over the moving averages. They're still declining. Well, 40-week is flat or maybe very slightly rising here. And RSI is just, right above the midpoint here. And it's been rolling along above 50 for quite a while. And then we had this V-shaped recovery, dip and recovery here, just like we saw in stocks. So if high yield can just get back into this area and kind of hang out, that would be fine as well. Commodities correcting here a little bit. We can skip that and go right into crude oil. This is where the action has taken place. We've been noting for several weeks now just the massive, massive ranges on the weekly candles of the crude oil futures. And this week was no different as we finally lost the anchor off of this breakout. We're above the sharply rising 10-week moving average. RSI is back down toward the midpoint, and there is no extension any longer. Even last week with this big red candle, we're still quite a ways above the 10-week moving average. So that situation has resolved. In the center of the Bollinger Bands, which would be a 20-week moving average, are still well below price here. So no extension. This could easily lead to some more follow through or correction as price comes down and the Bollinger Band midline comes up. Maybe they meet somewhere in here next week. But oil is quite erratic now, and probably not much of a reason to be involved there on one side or the other. Gold continues to test this anchor from the all-time high. This was an intra-week high, not a closing high, but we could draw the anchor in from this candle as well, and it's not going to look that much different. Price is above it, but the declining 10-week average is still in here as well, and so gold looks fine. It's just still working off this was quite a massive move, and it's been correcting and recovering and could easily lead to more upside here, or it could just as easily lead to some more sideways action in here as the gold market participants get that price action figured out. Silver, similar action. Here's the anchor off of this weekly high candle, and just trying to resolve some erratic price action, bring the ranges back in. And that's probably the most notable development here on both of these, is that we've gone from a period of very wide moves to now a period of more tightly controlled weekly candles here as the price action gets a little more orderly but still making upward progress at the same time. So, looking into the relative strength measures, growth versus value, very strong move here in the direction in the favor of the growth sector. No surprise there when we see such a strong bounce in the markets. Consumer discretionary versus consumer staples, another very strong move here, which is telling us that, if we didn't already know this, defensive posturing has lightened quite a bit. For several weeks, we continue to watch small indications and suggestions that positioners and asset allocators were getting more and more defensive or conservative, and that has changed shape, as we see here, which of course we already know from the massive moves higher in the SPYs and the Qs and so forth. So this is just another one of the kind of beneath the surface views of that. And looking at the cap weighted versus equal weighted indices, we can see that the equal weighted S&P is rising as well, but both of the favor was in the direction of the SPY, but both of these have gone up very nicely. Here's the RSP on its own merit, and here's the equal weighted NASDAQ 100 on its own merit. But strong action there for both of those. This week actually resolved a little bit towards the equal weight version of the Qs, but we skipped over the high beta versus low volatility. Nothing surprising here. New closing high on the week for that. And all of that confirms, again, what we already know, that risk on is back in a big way. Into some of the individual sectors or areas of the market, the semiconductor index continues to be the top dog, the leader, the one going up the most. We've got another very strong weekly candle and new highs on the semiconductor index. The biotech index, XBI, again, another little bit of a rest here last week, which was all it needed to jump again. And this potential rounding top that we started watching has absolutely been obliterated. So that is negated. It's out of the picture. We can take that off the chart. And now we watch as RSI is getting a little overheated here after 3 weeks of progress there. And the one that's had everyone concerned for a long time, software. Look at the massive candle in software here this week as it moves, gets a bit of a bounce from this area that we've been keeping a close eye on, and back over the declining 10-week. We've got several, probably too many anchored VWAPs drawn in here, but this is the one that matters, and you notice that price touched it precisely. That's off of this high candle back in October of 25. So there's still some proving to be done for the software sector, but this is a very strong bounce and a very good indication that buying power is back, or that control is back to the buyers. However, it does still need some confirmation by staying up in this area and starting to drag the shorter term moving indices upward instead of downward. So Mag 7 names were very strong this week. Big bounce here on those. All 7 of those stocks were leaders in the individual price action. Financial stocks continued their recovery, now back to a slightly declining 40-week moving average and right in the center of the Bollinger Bands here. So we could stand to see some more proving from the financials and really take this strength up a notch in the overall market. But so far, so good there. And energy, as we saw oil come down, the XLE energy sector has been moderating as well. So it's hitting this anchor from the dip back here in December of last year, below the 10-week moving average, but still holding above the center of the Bollinger Bands there. Just very similar to the crude oil futures. So a very quick glance at some individual Mag 7 names here. Apple back over this area of price history here and looks pretty strong. We really want to be picky, we could draw in a bit of a trend line in this area and say maybe that adds a little resistance next week. We could even take it a step further and look at it like this and say that this is a part of an overall consolidation here in Apple that still could go either way, but no disputing the fact that this is 3 very strong weeks of price action for this stock, and would not be surprised to see a breakout over this range here and out of this consolidation in the next week or two. Amazon back to a new weekly closing high, or at least on this chart time. Very strong recovery here, and just really good follow through after what was a massive week last week on Amazon. Google looking very strong as well, and Meta still not out of the woods. This is more like Apple here in that we've got, we could draw a trend reference in here and say maybe there's a little resistance to come into play in the coming weeks. Meta, but that will remain to be determined. But tying this back to the overall markets, 3 very solid up weeks here. The strength is proven. There's no disputing the fact that the recovery is incredibly strong. The question as we look forward to next week is, when does it take a break? So far, there has been no dip, no pause, no real opportunity to get a pullback for a good entry back into these things. And of course, that's what's on everyone's mind is when can, if you haven't already bought, when can you? And I've talked a bit about that earlier this week and in last week's videos about drilling down to the smaller time frames, how to pick your spots and manage your risk in a market that's running away like a runaway freight train. And there are tactics and strategies for that. But going into next week and the next 2 or 3 weeks, some pause or pullback would not be surprising, but we have to wait and let the price action lead and tell us what is going on. Microsoft, as we saw in the software sector, just a really, really strong bounce here in Microsoft from down below the 4-week moving average all the way back up to the center of the Bollinger Bands. We still have this anchor off of the highs to deal with, a little above price there. So like some of the other names, we still have some more proving to do, but this is a tremendous start to the recovery for Microsoft if it can hold up. NVIDIA, like the semiconductor index, very strong week number 3 here on this rise. And this area right between 187 and 190 has been a really strong challenge or a strong wall for NVIDIA for months and months now, and it just jumped right through that without even taking a break there other than the weekend closing hours. And finally, even Tesla trying to come back online as a upward trending stock. It's not there yet. It's paused right here at the still rising 40-week moving average. It did touch this anchor off of the breakout candle back here, or failed breakout, I should say. So there's still some work to do for Tesla, but like many other names, it's a very strong start there to a recovery in what's been a beaten up stock. So now let's get under the surface and take a look at breadth and participation as we consider the percentage of S&P 500 stocks that are above a 50 and 200-day moving average. And what we see here is just, once again, very strong recovery, a sharp, smooth rise all the way from below 20% on the percentage above a 50-day average back up to 59.84 here. So the participation is strong across the board there, as many more stocks, 3 times as many stocks back above a 50-day average than we saw just 3 short weeks ago. And back above a 200-day average has a nice uptick here as well. So we're seeing the technicals improve across the board there in individual S&P 500 names. And now for a look at our bullish percent indices. From a sharp decline to a very strong recovery. You're noticing a theme here, I'm sure. That's the case on almost every chart we look at. So out of the woods there on the bullish percent index for the S&P 500, we're in bull confirmed status. It took out this previous column of X's here, put in a buy signal. That's a point and figure buy signal, not any, don't read into it any more than that. And by the way, while we're looking at the relative strength and the breadth and participation, you need to go back to the website and check out the chart school articles here. Here is the article on the bullish percent index, what it is, why do I look at it, and how to interpret the data. So take a look at that. And then another one that is very popular was RS relative strength. What is it? We've got ratio charts, we've got RSI, we've got ranking systems, What are they? How are they different? And how are they meaningful? Take a look at both of those on the Chart School tab of tradingadventures.com. Moving on, that was the S&P 500 version. Let's look at the NASDAQ 100 version. And once again, very strong recovery right back to this plateau. This has been the top for quite a while now. It doesn't mean it's going to reverse hard and go back down. What I'm just pointing out simply is that this index or this particular measure has been virtually unable to get beyond this 64 mark for quite a while now. What that means, I'm not sure. It hasn't prevented stocks from going up. This was back in, let's see, there's August of last year. So if we consider, let's go back over here to the Qs, just while we're putting all of these pieces together. August of last year, right in here, and we can see that even though participation on the bullish percent index was kind of stagnating a little bit, the market kept going up just fine. So it's just another view of what's going on in the individual names there beneath the surface. So as long as it stays up in this area, that's just fine. And these little dips just show that some of the individual names are getting hit, and maybe there's some opportunity to buy when you get back down in this area. So last one is the NYSE index, and more strength there. So we're 3 for 3 on the bullish percent indices. This one is still in bear correction status because it has not produced another buy signal yet. But that's your action on the bullish percent indices. So what does it all mean? Well, let's consider what we've just analyzed and looked at here. This wasn't a slow recovery. This was incredibly aggressive buying, and that matters. We've gone from a situation last week of questioning, do we see some potential overhead supply here? How do we deal with the price being back to the middle of the Bollinger Bands, and so on and so forth? And what we see this week was there was no supply. If there was, it got zipped right through very quickly. We're back to new highs. The buyers continue to be incredibly aggressive. If we look at the roadmap chart here, and I'll take this out, zoom a little bit here. Since this recovery a couple of weeks ago, that's about as clean of a trend as you can get on these time frames here. ES futures, once they got back above the 5-day moving average, they never looked back. They tested it a couple times, and then after this test and it started to rise, the race was on and just steadily higher. Will that continue forever? Of course not. There will be another pullback. Don't know when and don't know to what extent, but there will be dips and pullbacks, and price will not stay above the 5-day moving average forever. But at the current state of things, the buyers are definitely in control and driving prices higher. So can it sustain? Again, we've gone from defensive positioning to aggressive buying. We've gone from potential overhead supply to breakout. We've gone from narrow leadership to broad participation. About the only chart we saw in this review so far that didn't look incredibly strong was the financial sector. Now, I'm excluding the IGV has still got much to prove, but the action from this week was very strong. So the sequence we've been watching is complete. The market has recovered. It's back to new highs, and that changes things. This is no longer a bounce. It's a trend attempt. As this is, some stagnation, some decline, and a strong bounce, this looks like a resumption of this trend and so on. So this is what the confirmation looks like when buyers show up in size and in force. That takes strength to expanding levels. It's not contracting anymore, and we should look for that to continue. Trends in motion tend to stay in motion. Again, doesn't mean it's going to go straight up for a fourth week. Of course, anything is possible, but there will be pullbacks. There will be breaks and pauses in this action. We just don't know exactly when or to what extent. And here's a potential. You've got several risk factors here. Of course, one is that we get a sharper pullback right here as people have gotten kind of max long in their positions and portfolios. That would not feel great, of course. A more moderate preferred scenario would be a slight retest of this breakout line. This was the extension level that we've been watching for a long time. There's several weeks of price action in here as a good reference point to see SPX come back to this 69, 69, 60 area and then show an ability to hold that level, and a resumption of strength would be the ultimate buy setup, in my opinion. But the market doesn't care what we think is ultimate. It will do what it will do. And in the meantime, waiting for a pullback that never comes or doesn't come soon enough has already cost a lot of people some money. And the question is, does it even give you a chance to get in at a better price? It could give you, would probably give you a better risk management level, which is, of course, is very important. But we can already do that, as I've talked about several times this week, by zooming in to the smaller time frames and finding some more applicable or tighter risk management levels there along the way. So that's the game plan for that has been the game plan for the last couple of weeks, and should be the game plan continuing forward for the next couple of weeks. We buy up trends and we manage risk. So if the risk is too wide on a weekly chart, you move into the daily chart. If it's too wide for your comfort on a daily chart, you can move into a 30-minute chart, and so on and so forth. Be ready for anything. Establish your risk management parameters and your position sizing in advance, and be open to the different possibilities. We've waited for confirmation, and now we have it. The market has shifted from a bounce to a trend attempt, and that is where we stand right now. So I'll be back with more updates throughout the week. Keep an eye on my website and the Twitter feed there. And as always, if you want to get some more information, education, lessons, and tactics on how to put this into specific practice, come check us out at alphatrends.net, where you can get several market update and strategy update videos a day from both Brian Shannon and myself, and we can help walk you through how to put these ideas into actual practice. So that's it for today. Hope you enjoy this. If you do, share it with a friend. If you're not subscribed and you're new here, please hit the button on the website, and I will keep the updates coming.